Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Manulife Financial Corporation, latest report. Manulife Financial Corporation offers a wide range of financial products and services to individuals and institutions across the globe. The company's business segments include wealth and asset management, insurance and annuity products, and corporate and other. The Wealth and Asset Management segment provides investment advice and solutions through various channels, including agents, brokers, banks, and independent securities firms. This segment caters to retirement, retail, and institutional clients, offering a range of products and services tailored to their needs. In addition to wealth management, Manulife also offers insurance and annuity products, including life insurance, long-term care insurance, and guaranteed annuities. These products are distributed through various channels, such as agents, brokers, banks, and direct marketing. The corporate and other segment is involved in property and casualty reinsurance, runoff reinsurance operations, and other businesses, including timberland and agricultural portfolios management. Manulife also engages in insurance agency, broker-dealer, investment counseling, portfolio and mutual fund management, property and casualty insurance, and fund and investment management. Furthermore, the company provides integrated banking products and services to its clients. With a rich history dating back to 1887, Manulife has established itself as a leading financial institution with a global presence. Manulife's stock price increase. A year of strong performance the past year has been a remarkable one for Manulife Financial Corporation, MFC, with its stock price rising by 49.38% from $25.92 to $38.72. This significant growth can be attributed to several positive news events that showcase the company's financial strength and management confidence. One of the key drivers of this increase was Manulife's strong financial performance in 2025, which was reported in early 2026. The company achieved record core earnings and insurance new business results for both the full year and the fourth quarter of 2025. This included a 3% increase in core earnings to $7.5 billion on a constant exchange rate basis. In addition to its financial performance, Manulife's board of directors announced a 10.2% increase in its quarterly common shareholders' dividend, raising it to $0.485 per share. This move is often seen as a signal of financial strength and management confidence, which can positively impact stock performance. The company also unveiled a new normal course issuer bid, NCIB, program, authorizing the repurchase of up to approximately 2.5% of its outstanding common shares. Share buybacks can enhance shareholder value by reducing the number of outstanding shares and boosting earnings per share. Furthermore, Manulife's core earnings within its high-growth segments, Asia and Global Wealth and Asset Management, Global WAM, saw notable increases in 2025, with growth rates of 18% and 14%, respectively. The company also achieved double-digit growth across key new business metrics, including a 14% rise in annualized premium equivalent (APE) sales. The collective positive developments, particularly the strong financial results for 2025 and the accompanying shareholder-friendly capital allocation decisions, have contributed to the significant appreciation in Manulife's stock price over the past year. The company's refreshed strategy, aimed at achieving sustainable long-term growth, has also instilled investor confidence in its future prospects. Manulife Financial Corporation maintains a market capitalization of $501 billion, broadly in line with the industry peer group. Manulife Financial Corporation trades at a higher price-to-earnings ratio of 17 times and a higher price-to-book ratio of 1.79 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company exhibits a very high leverage profile, with liabilities accounting for 95% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. equity expansion may be driven by financing activities rather than core business profitability. The company has continued buybacks despite weak revenue growth, raising questions about capital allocation priorities. The company have a dividend yield of 3.33%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline are multifaceted and varied across different regions and business segments. On the growth side, new business CSM has been a significant contributor, with a 28% increase in 2025 and 21% in Q4 2025. APE sales have also seen an uptick, albeit with some fluctuations, while NBV has experienced steady growth. The adoption of Gen AI-powered sales enablement solutions and advanced AI-enabled agency tools in Asia have further boosted revenue. In addition, partnerships such as the one with Munich Re Life US to enhance underwriting efficiency and the expansion of wholesaling teams in the U.S. have contributed to growth. Strong new business growth in 2025 has also been a key driver, particularly in regions like Asia, where core earnings increased by 24%. On the other hand, revenue decline drivers include unfavorable life insurance claims experience in the U.S., lower investment spreads, and net outflows in various segments such as institutional asset management, retirement, and retail. The company's net income and profit margins experienced mixed results over the past year. In terms of net income, the full year 2025 figure rose by $0.2 billion to $5.6 billion compared to 2024. However, the fourth quarter of 2025 saw a decline in net income attributed to shareholders, decreasing by 9% from the same period in 2024. On the other hand, profit margins showed significant improvements across various regions and segments. Core EPS increased by 8% for full year 2025 and 9% for the fourth quarter of 2025 compared to the previous year. The core EBITDA margin also saw substantial growth, rising by 260 basis points for full year 2025 and 60 basis points for the fourth quarter of 2025. Regional profit margins demonstrated varying trends. In Asia, the profit margin improved to 39.5% in full year 2025 and 41.2% in the fourth quarter of 2025. Canada's APE sales decreased by 6%, but NBV increased by 7%. The U.S. saw significant growth in both APE sales and NBV, increasing by 24% and 22%, respectively. The global profit margins also showed improvements across different segments. The global WAM segment reported a profit margin of 28.5%, while the Asia segment declined to 39.4%. The Canada and U.S. segments saw increases in their profit margins, reaching 20.8% and 16%, respectively. Overall, the company's profit margins demonstrated resilience and growth despite fluctuations in net income. The company's debt level has experienced a significant change over the past year. According to financial reports, the debt level increased by $339 million from 2024 to 2025. This substantial rise in debt indicates that the company has taken on more liabilities, which may have implications for its financial stability and future performance. However, despite this increase in debt, the financial leverage ratio shows a slight decrease of 0.1 percentage points from 24% in 4Q24 to 23.9% in 2025. This subtle change suggests that while the company's debt level has increased, its ability to service and manage its debt has not significantly deteriorated. Nevertheless, the increase in debt remains a notable concern for investors and stakeholders, warranting close monitoring of the company's financial performance going forward. Management is optimistic about the company's future prospects, citing momentum in 2026 as a key driver of long-term growth. To seize opportunities ahead, they plan to focus on disciplined execution, diversification, and building a winning team culture. The company will leverage technology, including AI-powered solutions, to empower customers through early detection and enhance underwriting efficiency. In terms of specific targets, management expects double-digit growth in insurance new business results, with broad-based strength across segments and strong performance in Asia. They also aim to improve margins and sales volumes through a favorable product mix and higher sales volumes. Overall, the company is committed to achieving its medium-term financial and operating targets by executing strategic plans and adapting products and services to changing markets. The company has demonstrated its commitment to returning value to shareholders through various initiatives. One notable example is the payment of a dividend increase of 10.2%, indicating a focus on rewarding investors for their loyalty. In addition to this, the company has also engaged in share buybacks, purchasing 3.1% of common shares outstanding for $2.4 billion in 2025. Furthermore, it has announced a new NCIB program that allows for the repurchase of up to approximately 2.5% of outstanding common shares. These actions suggest that the company is proactive in managing its capital and prioritizing shareholder value. By investing in share buybacks and dividend increases, the company aims to create long-term value for its investors. That concludes the financial summary for Manulife Financial Corporation. Feel free to comment below, and I will be happy to answer them when possible.